Hi guys, Koukun here, coming at you with another video about real estate investing. So today I'm going to be talking about the differences between an insured mortgage and a conventional mortgage. So in Canada right now, if you want to buy a property with less than a 20% down payment, you have to get what's called an insured mortgage. Basically, it's a mortgage where you have an insurance on the mortgage by three of the mortgage insurers, and this allows you to put a down payment of between 5, 10, 15, anything under 20%, but over 5% of the purchase price of the home. A conventional mortgage is when you have a 20% down payment or more, and you get a mortgage for the rest of the amount. Here are some key differences. If you're getting an insured mortgage, the maximum amortization, meaning the number of years it would take to pay off the entire mortgage, would be 25 years. A conventional mortgage, it can be up to 30 years. Some other differences are that in Canada right now, the only people or the only institutions that can give conventional mortgages are banks or credit unions to give you up to that 30-year amortization, whereas in the insured mortgage space, those same lenders can participate, but there are other companies called monoline lenders. So they're smaller than the banks, but they also give regular mortgages at the lowest rates, I would say, equivalent to those of the banks, sometimes even less. Some key differences between the two mortgages are that if you're getting an insured mortgage right now, the interest rate on those mortgages, because of that added competition of the monoline lenders, is actually lower than if you even had a full 20% down payment. So believe it or not, if you're putting less than a 20% down payment, you're going to get a better mortgage rate most of the time. And right now those rates are around 3.5% for the conventional mortgages, and it's closer to 3% for the insured mortgages. So there's quite a bit of a spread there between the two options. But again, insured mortgages, primarily the criteria is it has to be your first home and it has to be your primary residence. And qualifying for it can be more difficult than a conventional mortgage because the loan amount is greater, you're paying it off over a short amount of time, so the payment every month is higher, so therefore you need to be able to qualify for that with your income. But here are the two rules. If you're looking for a good mortgage broker to work with, I'm happy to share my contacts. I have a broker that I've used to purchase all of the properties we've bought so far, and I refer them to all of my clients as well because they do a very good job at helping our clients get mortgages for even their personal home or investment properties. So I'm happy to share that if that's something of interest. And I'm going to just put it out there. So I work as a realtor in the Niagara Region and Hamilton, focusing on clients and helping them to purchase investment properties and coaching them through that process from A to Z, from what to look for to how do I find a tenant for the property that we've already bought together. So I help them through that whole process. If this is something of interest to you, I'm going to put a link in the description below. It's a contact form, so it'll simply ask for your basic details. So if you're interested even in just finding out what I can offer, and if there is potentially a way we can work together where I can help you achieve something that you want to achieve within real estate, fill out your information below. I'll contact you and schedule a time to meet if you live within the Golden Horseshoe area of Ontario, and we can meet at my office, and we can just go through some of the basics of what I offer. So I'm just going to put it out there if that is something of interest to you. If not, always keep watching these videos. If you haven't already, please subscribe, and if this video was useful and if you actually like it, give it a thumbs up. Until next time, take care.